The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast. If you see something here today that you really like, we would appreciate it a great deal if you would go ahead and forward that on to your friends, your family, your coworkers, anyone else out there interested in this sort of investing information. It would help us out a lot. Thank you very much.
It's kind of like birds of a feather flock together. If you're interested in this subject, you're bound to know somebody else who is also. So we appreciate
Absolutely.
your forwarding the link and making any comments that are, we appreciate any comments and feedback on our podcast.
Love the feedback, you bet.
So with the market this year, we've spoken in earlier podcasts about how the market has reached new highs. It's at 26 new highs on the S&P 500 this year, and we still have 2 more months to go in a time frame that historically is generally positive for the market. That would actually extend into January. That'd be 3 more months to go to see if we get more new highs. But often people are skeptical about how high is high, and
Right.
isn't there a great deal more risk investing at these levels? And then they kind of get sucked into some thematic investment story that doesn't work out too well, and they start getting a little paranoid about whether the market is actually out to get them. And the answer is yes. The system is not set up to be user-friendly.
That's correct. In fact, many parts of the big picture investment system are set up to work against you. It's really never been harder to be a very disciplined, independent thinking investor. There are so many points of view available, 1,000 times a day, coming from everywhere, and it's really tough to distill that down to what matters. That's one of the reasons that we trend to be we follow trends. We just watch the money, and we don't care much about what people are saying about the trend. We just like to watch, where's the money going? Is it flowing in or flowing out? Where is it flowing in or flowing out? And let's follow where the money is. That usually tells you the truth about where things are going. But it's important to remember that most of that stuff you're seeing, most of the stuff you're hearing, most of the stuff you're reading, it's all designed to sell you something. It's all a very lightly shaded sales pitch telling you, well, here's the big problem, and to fix the problem, here's what you need to buy. That's where most of those go, and most of those are leading you in the wrong direction. Anytime someone's just pitching you a sale, they're not too concerned really about where the market is or what's going on. They're concerned about making a sale. And you need to try to strip that out of your decision-making process and track things that are real, track things that are data-driven, and try to ignore everything else. It's just that it's getting harder and harder because there are so many places where you're getting information telling you to move one way or the other, and very few of them are based on any real data. They're based on someone's opinion who has a bunch of stuff to sell.
And part of that's really a framing issue that the industry has been very successful in restructuring. If we go back a number of decades before Charles Schwab left Merrill Lynch and
Yes.
created his own company as a discount stock brokerage firm, he was virtually, I'm sure, laughed out of cocktail parties and
He was.
dinners, saying nobody is going to do this on their own. They're going to need a broker. Well, prior to his introduction of low cost trading, if you wanted to buy or sell a stock, I mean, you could spend several hundreds of dollars in a commission on a single trade to get in
Right.
and again to get out of that position. And with those kind of costs associated, people were highly motivated to research what they were doing, to figure out whether or not making this investment or getting out of it was actually worth the cost of the transaction. Charles Schwab changed that with his introduction of low cost discount trading, which has morphed into free trading across many platforms.
You
It's
bet.
basic, the industry basically has moved from let's see how much money we can make on this trade, selling the concept of you need to own a given company's stock or bond, to how much money can we manage, and has become among brokerage firms, a contest for assets under management, and costs have continued to go down. It has been a fight to the bottom, which is a benefit for investors.
Makes it better. You bet.
You don't have to
It,
go
it,
back very many decades to have to pay 8.5% sales commission to buy a mutual fund. You didn't want to do the research yourself, so you bought a mutual fund and let the big management company do that for you, but it was an 8.5% sales charge. And then Vanguard introduced zero commission, no load funds back in the early 70s. And again, the industry said nobody's going to buy anything from Vanguard. That's not going to work.
Goodbye. You're done. Yep.
Guess who's one of the biggest mutual fund companies in the world today? It's Vanguard, and they have forced the hand of all the high expensive brokerage firms. And we see
They
that
have it.
actually amplified with the advent of recent technology. And Perry, you were describing the development of Robinhood before we turned on the microphones and recording.
Sure, that's just we were talking about the constant pressure to buy something, to change something, and platforms like Robinhood, and in any of the new ones actually, especially the mobile apps, anything you have on your cell phone, they took a lot of lessons building those platforms from number one, the gambling industry, how do you get people to spend their money, and the gaming industry, because they want you to stay on the app as long as they can keep you there. So they want it to be interesting, exciting, and they know the longer you stay, the more decisions you're going to make, and the closer they are to getting you to change something again. And they need you to keep moving stuff around to buy and sell things. Even if you're doing it at zero commission, they need you on their app, buying and selling their stuff. And it's very important to keep those assets in house. So let's keep them entertained, and it becomes it becomes a piece of entertainment instead of a piece of investing. And Benjamin Graham, he wrote The Intelligent Investor. That's Warren Buffett's Bible as far as investing goes. The best book ever written. And he always said, if you look for your worst enemy in investing, it's almost always yourself. And that's because you make bad decisions based on emotions. And now those are being used against you. They're actually saying, if we can get them ramped up and get them pushed in one direction, and then have this lights flashing, bells ringing application, we're going to get them to make some decisions here, and they're going to stay right here. Their money's all going to stay here, and we're going to keep it as long as they're in the market. And that's their end game. Nowhere are they thinking about, are your returns good or not? Just, is your money staying here? And that's as far as their the decision making process goes. At that point they're finished, and it's up to you whether you're making any money or not. And it's not likely that following those recommendations or staying on a platform that is built on a video game concept is going to help you with your returns at all. You're probably heading the wrong way, and you need to look at something else.
Well, if you've ever been to a casino, I mean, if you you go to Las Vegas, you go to the airport, you've been in a casino because you can't get out of
Correct.
the airport without walking by
They're
multiple
ready.
opportunities to gamble your money. Put some money in that one arm bandit there
There
and
you
see
go.
what happens. And what happens is, particularly now that they're digital, they're even more addictive with the flashing lights and the sounds. But all of that is
Yep.
programmed psychologically. They, the manufacturers of those machines and the software that's on your app to trade stocks has been designed in part by psychologists who have said or tested that this type of feedback elicits a certain type of response, which is addictive. We do more of that, the more you're likely to stay on our platform and try one more trade. Just do one more trade. and if the lights flash, and particularly if you make a little bit of money, it's easier to stay and do another one. And as you were talking about that, it reminded me of a movie that my wife and I recently watched. And it was a couple who were running out of money. It's in the Old West. They're running out of money. And he has a couple of bucks left. So he goes to the roulette table and he
Right.
wins. And then he wins again. And he wins again. And all of a sudden, he has enough money that they could actually get to the California coast. And she says, "Take, let's go, let's go, let's." He says, "No, I'm on a hot streak." And he lays it all down. And of course, the last time, he's broke again.
There we
Well,
go.
the same psychology is what drives all these free phone apps. It's been
Correct.
tested. So is the market out to get you? The answer is the system is. And
Yep.
I've used this in some other podcasts that we've done, and as I mentioned, when I talk with a new prospect, part of what's important to understand is the framing of the industry. If we go back to the 70s and before, brokers were brokers, and everybody understood your stockbroker was the man who had financial information. It was not readily available. They had company research, and you couldn't get it unless you did
You didn't
business
get
with
it.
them. But it
Yep.
was expensive to do business with them. But you took your time to do your research. Things have changed over the last several decades. What hasn't changed is the correlation. If you're shopping for a car and you walk onto a car lot, you understand what the name of the game is. You're shopping. You want to make a good buy. You've got your hand on your pocketbook, and the salesman is trying to get your hand off of it to convert your cash into his commission. And if
Bingo.
you do and you drive out with the car, you're happy with the car. You know, you understood the name of the game and what the product was. When you walk into a financial advisor's office today, they're no longer called brokers, leaving you with your on guard pretty high. They're now financial advisors. We're not here to sell you anything, we're here to give you advice. But unless you're dealing with somebody who is only a fiduciary, who is required to put your interests first, you're dealing with a broker. Except that now this office looks like a bank, solid, secure, financially knowledgeable person behind the desk whose job is the same job as the salesman on the car lot, is to convert your assets into their commissions and manage assets under their platform. It's just
Correct.
not as obvious, but you should be on guard. Your primary defense is, how do you get paid? Do I pay you for your advice and that's the only way you get paid? Or do you have multiple sources of commission income in addition to what I might pay you? If that's
Right.
the case, you're dealing with a broker. Think of it, used car salesman behind a really nice desk in a really nice office, offering you coffee and lots of smiles when you walk through the door.
There you go. And the other big problem right now is you don't need to go to an office. All of that information is being offered to you online. And there is zero barriers to entry there. Anyone can get online and tell you that they're a financial advisor, a market expert. I've been doing this for decades, and here's what you need to do now. You have no idea who they are and whether they've been doing it since noon today for the first time or they've been doing it for 25 years. They don't have to prove anything to you, but they're going to put their opinion out there, and they're probably very good at it. There's all kinds of platforms to help them look very professional. Pretty soon you're signed up for their newsletter and you're listening to somebody who's still living in their mom's basement trying to figure out what to do with their lives. But meanwhile, they're telling you what to do with your retirement money. So you have to be careful because it's never been easier to get online and pretend you're something you're not.
Well, and one of the ways you can do that is you can always go to FINRA's website and do a broker check, and you can just
Sure.
search broker check online, and you'll end up at the website. And if you're concerned about an individual that you're talking to, you don't know who they are, then you can put their name in, and you'll find out if they at least have some proper licensing. But one of the problems that I find people get into unexpectedly is great concepts.
Sure.
How about electric vehicles? Well,
Can't
electric
miss.
vehicles had a
Yeah.
hot run, and now that it looks like Donald Trump is probably going to win the election, given some of the current polls, you take a look at electric vehicle stocks away from Tesla, and you find that they're really having a hard time. They're even having a hard time in China, which is the biggest consumer of electric vehicles. Their their automobile buying public has turned very skeptical towards more electric vehicles, and we end up with multiple reasons. But it doesn't just have to be that. I mean, you would assume that because of EVs and the batteries in our cell phones, lithium would be a great investment, and it was for a while. But if you look at it recently, over the last year or so, I mean, it's been a great place to lose money. The concept of lithium is true and real. I mean, we need that.
Right.
In fact, we have a new massive lithium mine potential here in the United States, except the current administration won't allow mining. So we're going to buy our lithium from China instead of developing our own resources. That that messes up the theme of lithium is a long-term buy. Maybe it is long-term, but that's part of the problem. Is a long-term can be longer than you expect. And I don't know how close we are to the end here, Perry, but I'm going to share this share my screen, because we were talking about long-term returns, and Ritholtz put out this chart of long-term returns. Now there we go. And in the short term, there's lots of reasons for attractive returns. In the long term, as you look at these decades, the rate of return is pretty stable if
Right.
you are really a long-term investor. But long term, most people don't have 90 years for this to wait. And you don't have all your money to invest at the beginning of the period, which is what these calculations show.
Right.
This does not show dollar cost averaging, starting in your 20s or 30s and having to accumulate it between then and retirement. Because that's a real problem. It changes the rates of return. So one of the assumptions people make is the market had a great year. I should have a great year because I put money in the market. But maybe I didn't buy the same stuff that was going up, and I didn't put enough in to actually capture it, because I didn't invest on January 2nd, so the market's always closed on the 1st,
Right. And that's
which
the
all these
important part,
calculations
Don. You're
assume.
right. Yep. Looking back is easy, and cranking out these statistics about what if, and what if I invested, and what if I put all my money in Apple the day it went public. There's no end of those, and most of them are just artificial metrics. You don't need to track. You don't need to figure that stuff out. Most of it is leading you astray anyway. Track data, track real data about what's going on now, not what happened 40 years ago. You can't invest 40 years ago. It doesn't matter. And the past 40 years doesn't mean the next 40 years are going to go that way. So that's the most important thing. React to what's going on in the market currently, to the best you can, and avoid big mistakes by believing the headlines, believing the narrative, and investing based on anyone's opinion about what's going to happen in the future, because no one knows. Track the data and make disciplined decisions. And anything else you have that you want to put in there, Don? Because we should be wrapping this one up.
Okay, well, if you found this interesting, you probably know somebody else who would too. Subscribe, use the link down below, and forward it to your friends, family, coworkers. Birds of a feather flock together. If you're interested, you're bound to know somebody else who is. We do have our monthly live stock market update webinars on the first Saturday of the month. If you want to subscribe for the next one, go to our website. The shortcut is IRI. That's 3 letters, IRI radio.com. Look forward to seeing you again on the next one. Have a great day.